So Giles, wonderful to have you back with us here. We invited you because of this extraordinary price action we saw yesterday in the crude oil market, with WTI actually heading into negative territory, with the price going down to minus $37 per barrel yesterday. What happened there?
Just chronic oversupply, just oil that no one wants given the coronavirus. And if there's oil there, you've got to do something with it. You've got to find a storage place. If there's no storage left or too expensive, you've got to put it in tankers. So yes, the price went crazily negative, just briefly.
So essentially it means traders were paying people to take the oil off their hands.
That's exactly right. But they've rebounded a little bit today. And of course, looking ahead 1 month, the future contract is saying that prices about $20 for June, that's in the US, and $25 outside the US in the global markets. So not actually negative, but still very, very low prices, telling us that there is massive oversupply on an ongoing basis.
So if we look a little bit ahead, what does this mean, given the fact that coronavirus is keeping our highways empty, all the planes on the ground, trade falling substantially, GDP and output falling substantially? What does this mean 3 to 6 months out on a structural level?
I think it says prices are likely to stay low, by which I mean way below the sort of $60, $70 we were used to last year. Perhaps in the 20s, perhaps a little bit above, perhaps below. And of course, that will squeeze the US shale industry, whose production costs, of course, it varies from one to another, but somewhere around $40 these days. And that will really bring US output down. And in a sense, that is the US contribution to that deal that the OPEC Plus people made just a couple of weeks ago.
So this looks like it's going to be, or it is already, particularly painful for the US and specifically the shale industry, the fracking industry. This also has a geopolitical component with Russia and Saudi Arabia ostensibly in conflict with one another. What's going on there on a political level?
I mean, oil is geopolitics. And so, yes, we saw Saudi Arabia and Russia 6 weeks or so ago failing to reach agreement on output cuts. And then with Mr. Trump apparently pushing them, a couple of weeks ago, they came together and they did do a deal. They agreed very, very large output cuts by historic standards, 10, 12 million barrels a day. That's over 10% of global output. But as we're now seeing, that's not really enough to bring the oil price right back up. And I suspect that Russia and Saudi Arabia don't really want those prices to go right back up, because they'd be quite happy to see the shale industry in the US not destroyed, but certainly reduced perhaps somewhat in scale.
A lot of sort of pundits and commentators are also talking about the potential end of the fossil fuel industry. Is this perhaps a harbinger of such a development, or is that overdone?
Well, in a very indirect way. I mean, I think what is interesting is with the streets empty now in the cities all around the world, the skies clearer. We can actually see the stars in London now. People with asthma can actually get out and not breathe the fumes. I think all of this is just telling people very visibly how much pollution is caused by fossil fuels. Now, of course, people will have to go back to driving and flying and so on when the crisis comes to an end or begins to wind down. But I think this is just a visible representation to everyone of the damage that's caused. And I don't know, but I suspect it may accelerate some of the moves towards green investment and towards ending the kind of era of fossil fuels as dominant as they are.
Thank you, Giles, for joining us today. That's been really, really interesting, and we hope to have you back soon.